Why mutual funds? There are a lot of reasons why you need to be associated with mutual funds as an investor. The first and the most important to my mind is professional fund management. Now, all of us have some educational qualifications, all of us have an experience, and that's the reason why we are in our chosen profession. Similarly, a mutual fund manager has qualifications, has experience, and the biggest difference is that if we manage our own money, we'll have to do it on a part-time basis, giving time to our profession and families. But when a mutual fund manager manages the money for us, he is doing it full-time. That is his profession. And he's not the only person within the fund house to manage our money. He's got a large team of research analysts who are typically sector specialists. They are responsible for tracking companies within a sector, and they have information available to us because mutual funds are large institutional investors. They have certain amount of information which is more than a retail investor, and they are able to analyze that information and make more judicious decisions on why and where to invest. And that's one big reason why you need to be associated with mutual funds. The next advantage is diversification. Today, if you were to pick up one share of the 30 companies in the Sensex, you would approximately need 40,000 rupees. Now, if I had 40,000 rupees with me, there's no way I'm going to pick up one share of 30 companies. I will pick up 5 or 7 companies that I like. But if you were to do a simple SIP of 500 rupees and an index fund, with that mere 500 rupees, you are going to pick up those 30 stocks and thereby actually diversify your portfolio. As they say, don't keep all your eggs in one basket, and mutual funds actually help you to diversify and reduce your risk. The next is mutual funds have a lot of convenient options. You want to invest 25,000 rupees, you can invest that. You suddenly have an emergency and want to take out 5,000 rupees from that, you can do that. You are a salaried employee and you want to invest on a monthly basis, you can do something called the systematic investment plans. You are a retiree and want to have tax efficient withdrawals coming your way, you can use something called the systematic withdrawal plans. You are a business person and you have uncertain cash flows, you can actually use something called the systematic transfer plan and still participate in the markets on a regular basis. You can switch from one fund to the other fund, and if you want to keep on rebalancing your assets or do your asset allocation, there are a lot of conveniences that mutual funds offer, which I don't think are available so much in other investment avenues.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.